let's look at some of the movers, right? You have lots of earnings, lots of names on the move reporting different stories. ASML is with its earnings and has a warning, is under pressure. This is a microchip bellwether. And Jenny Horne, host of Next Gen Investing, is with us to take a look at this name under pressure.
Definitely under pressure, and I appreciated that you and Kevin were talking about some of these excuses we hear from markets and analysts, as well as management of companies. And ASML is not really an exception here, as they did blame so much of their guidance and the lowered expectation on Trump tariff uncertainty, which might be our bingo words of the next several months. But we did see shares falling this morning, underwhelming sales guidance. Well, they also said, again, tariffs were to blame. They have a virtual monopoly on the advanced machines that are used to manufacture some of the latest chips. But so that made it a really popular stock to, of course, trade in the AI boom. But we've since seen shares give back about a third of their value over the last 12 months. So sales came in around $8.8 billion for the first quarter. That was actually higher than $6 billion reported a year ago, but did fall slightly short of expectations. On net profit, that also did actually beat and rose on a year-over-year basis. Now, for the current quarter, they're expecting gross margin to fall between around 50 to 53%. Sales expected at 7.2 to 7.7 euro, and that was below the forecast of 7.8 euro. And the guidance range also was larger than usual because of the tariff impact. So what we've heard from their chief executive is that their conversations so far do still support their expectation that 2025 and 2026 will be growth years for the company. However, in light of this recent uncertainty, they're trimming their guidance accordingly. And as we know, this company, is based in the Netherlands, does have U.S. exposure. It's relatively small, but also this is a company that is then significant to so many others within the supply chain of AI. Many have said that actually a lack of spending from Samsung is, as well as Intel, is set to make the company more dependent on some of these orders from Taiwan Semiconductor. So everyone is connected right now. They did say net bookings were at least higher than what they were, nearly half of what they were a year ago. But right now, most of that was due to these lithography machines, which is where really the market in which they dominate. I think that tech earnings will be so hugely important. I know that unofficially tech, but Netflix kicks off also today after the close, I believe tomorrow after the close. But there's still going to be so much news to get through once we get these individual semiconductor and AI to see stocks earnings. I think they're going to be very interesting this quarter, Nicole.
All right, and so ASML and Nvidia certainly can provide some weight on the tech group overall. So there you got it. AMD also in the news today. That's down 7%. We'll turn our attention over to Tesla. While Elon Musk is still touting full self-driving this morning, Tesla's Cybercab production is now going to be impacted by the China tariffs as well, and that's a big story. Tell us a little bit about what you're watching there.
Especially because I think there was so much enthusiasm in the share price, even tied to the excitement over the Cybercab and some of their various autonomous offerings. So they did announce plans to ship, or they said that they're now with plans to ship components from China for the Cybercab and semi-electric trucks in the U.S. Were now suspended after President Donald Trump did, of course, raise these tariffs and amid this trade war. This could disrupt now their overall plans to start mass production of these much anticipated models, which is something that, again, Elon Musk has been touting to investors for so much of the last year. And it's also been a huge momentum driver for the shares. So I think that natural to see things somewhat reacting negatively today. Tesla was ready to absorb some of the additional costs when we first saw these tariffs announced, but was not able to do so when we saw tariffs obviously raised beyond the expected 34% on Chinese goods, leaving some of their shipping plans suspended. And yeah, that is, I think, going to be an ongoing concern where perhaps you were bracing for what we saw last time in 2018. You were not bracing for this extent. And Tesla has been very much on the move, as it's always, I think, one worth watching. The unraveling of shares, I think, has been so much tied to, though, the momentum we saw into the election. And now we're seeing a market that is digesting the fact that, yes, they might be mainly U.S. based for manufacturing, but not entirely. I mean, it's amazing to me when you break down the individual models and you see 70 to 65% made here in the U.S. So, yes, they are definitely going to be tariff exposed if things progress as we're expecting them to, at least right now. I guess a lot of unknowns there.
It's interesting because they were willing to absorb some of the costs, but then when the tariffs were raised, that's when Tesla and Elon Musk basically said no way, right? They were prepared to handle a 34% duty, but once those additional hikes went up to 145%, that's what made the cost completely unsustainable. They do have these plants in Texas and also in Nevada, but this large-scale production was supposed to begin next year. I don't know how they'll be able to do that, if that's on track. I don't know. Will they be able to do that?
I know. And this name, I mean, it doesn't exactly have the greatest track record as far as meeting these timelines that are outlined very broadly by Elon Musk. I've always said the story with Tesla recently has become so caught up in the Doge, Elon Musk, lighting the Teslas on fire. And I kind of disregard all of that, frankly. I think deliveries matter, outlook for this year matters, and also their autonomous component of their entire business is hugely why the bulls have argued this name is not a true auto stock. So that also really matters. I mean, some of the various now Cybercab, robo-taxi offerings very much matter to this name. So yeah, I think don't get too caught up in some of the for right now headlines that Elon Musk is also somewhat creating for himself, because what matters to this name in the long term is its margins, and also it is still relatively expensive. It's our most expensive Mag 7 name on a forward PE basis. So it's come down significantly, yes, but it's still pretty lofty as far as valuations are concerned.
Yeah, understood. And he still talks about full self-driving. He said, get ready for the car to drive itself right to your house. So I'm ready for that. And, in addition to everything that you said, I'll add in energy. The Tesla cars provide energy, and that's another story. So it's not just a car company. I had guests on this week who still like it and tout it at higher prices. Jenny Horne, great to see you this Wednesday morning. Thank you.